Live from Bloomberg's world headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the SEC delays on its decision to approve ARK's Bitcoin ETF application. More on the regulatory hurdles with Bit Digital CEO Sam Tabar.
And Circle builds a $1 billion cash cushion to buffer fresh competition from non-crypto firms entering the space as PayPal launches its stablecoin. We'll have more on that with Circle's Chief Strategy Officer, Dante Disparte.
Plus, bankrupt crypto lender Celsius wins permission to poll its customers on a plan to reboot as a new user-owned company. More on that coming up.
All right, so all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function, and what you will find is it is a relatively quiet day for the largest digital assets out there. Bitcoin right now down about 0.4%, still trading in and around that 29,000 level as we have been for some time. Ether's also down just a few tenths of 1%. One of the big underperformers on the day is Polygon. It's off by 2.7%, and then Bitcoin Cash, which of course is an offshoot of the original token, is one of those that is doing a little bit better, although I haven't found an explicit reason why. Bitcoin Cash up about 2.2% on the day, Matt.
All right. In terms of, I guess, crypto sentiment, we've seen a little bit of turnaround judging by the flows in and out of exchange-traded products. Here you see that we had decent months in June and July, but starting at the end of July and into August, the flows came out of exchange-traded products. Now we've seen a tiny little gain. It's only $5.5 million of inflows, but at least that's something, Kailey, a little bit of a turnaround for ETPs.
Yep, just a little bit of the green on the far right of that chart. All right, let's go from ETPs to ETFs. The SEC, as Matt said, delaying its decision to approve the ARK 21 shares Bitcoin ETF application in another drag to the highly anticipated product. For more, let's bring in Bloomberg's Vildana Heinrich. So, Vildana, how long is this delay? What happens from here?
Well, this decision was widely expected to be delayed. A lot of people thought that because the SEC has a lot of time, it has about 240 days from the initial application when it's initially filed to actually come to a decision where they can say they're going to delay, reject, or accept the application. And so the thought is that going forward, we have so many more issuers trying for a spot Bitcoin ETF. We have a lot more decisions coming up. We actually have a few coming up right at the start of September. So we're waiting to hear back on decisions that, again, a lot of people are likely expecting to be delayed, but we're waiting to hear on decisions for BlackRock, for Bitwise, for a number of issuers, and it's just something that a lot of people are anticipating, again, to be delayed as the ARK decision was.
Vildana, has the SEC ever given an explicit reason for its opposition to a Bitcoin ETF thus far?
Yeah, we've heard in the past that they've cited things like market manipulation, for instance, which is why the BlackRock application in June was such a huge deal, because what BlackRock did with its application is it said that it's going to have a surveillance sharing agreement with another crypto exchange. We think that maybe that's one of the things that the SEC is looking at and saying, okay, this satisfies one of the issues that we've had with, potentially approving a spot Bitcoin ETF product. We just don't know. The communications aren't exactly public. Issuers don't come out and talk about some of the communications they've had with
And of course, market manipulation and fraud are rife in a number of other underlying commodities. That doesn't stop the SEC from approving an ETF for gold or silver, for example.
Right. We've had gold ETFs for something like 20 years now, or, it's been a while. It is actually a comparison that a lot of people make where they say, look, we've had GLD for such a long time. It has something like $60 billion in assets. It's another space that we can make comparisons to. Why not let this product go as well? Also, we have spot Bitcoin ETFs in Canada and other places, and a lot of people are pointing to those jurisdictions and saying, look, it's been working totally fine. But again, it has not been approved. We have to wait and see what happens and what else the SEC actually says about maybe some of the issues that they might have.
Well, of course, we've heard a lot from the SEC in regard to many different issues in crypto, not just on the spot ETF, but also whether certain tokens should be designated as securities on exchanges like Coinbase and Binance. 19 tokens in particular that they said were unregistered by those exchanges. And yet, Valdana, we have some really interesting reporting on the Bloomberg today about how those very same tokens have actually seen trading increase. What's up with that?
Yeah, this is really, really interesting because when I remember that the SEC had sued Coinbase back in June, Coinbase and Binance actually, back in June, I honestly to myself thought, oh my gosh, it seems like such a long time ago. So I think part of it is that people just have short memories and they're sort of a little bit forgetting about what has happened just literally mere weeks ago. But the other thing is, and this is actually really, really interesting, is that Bitcoin is just not volatile at all. As you mentioned, it's hovering around 29,000. It's been hovering around 29,000 for weeks now. If you look at volatility measures for Bitcoin in any which way, you can look at 5-day volatility, 30-day volatility, 60-day, 90-day. It's really, really low. The coin is just, opposite to what we typically tend to think of for Bitcoin. It's just not been volatile. And so potentially some investors are going to some of these other more volatile, more choppy coins and trading those instead.
All right, Valdana Hajric, as always, thank you so much for your great reporting here at Bloomberg. Now, as market participants remain eager to see the SEC's decision on Bitcoin ETFs, miners are bittersweet about the entrance of major financial institutions into the space. That's according to Bit Digital CEO Sam Tabar. He writes this in a recent op-ed on CoinDesk. Quote, a spot Bitcoin ETF raises the uncomfortable prospect of outflows in capital from mining stocks to Wall Street financial products. There is irony in miners building the world's first decentralized monetary system only to turn it over to Wall Street for a last-minute assist. I'm pleased to say that Sam joins us now. So, Sam, I guess two-pronged question for you. How confident are you that a spot Bitcoin ETF is actually going to be approved? And then, what does it mean for you?
Well, we're basically well over 50% confident that eventually it will be approved. The SEC will get around to doing that. I think the SEC is delaying their decision to approve a spot market ETF for a singular fund. They will be looking at it from a batch perspective in order to avoid the perception that there is market manipulation. But look, the chances are definitely over 50%. But in our industry, it's tough to give regulators the benefit of the doubt. The regulators never liked crypto, so I can understand why they're dragging their feet. But, miners have played a key role. Go ahead.
Well, just to continue on that point, what does it mean for miners and Bit Digital specifically?
Well, there's a thesis that many capital participants will invest in an ETF rather than a Bitcoin miner to get exposure to Bitcoin. However, once that ETF is approved, Bitcoin will likely go up because that's the ultimate stamp of approval in terms of being a real asset that's recognized institutionally. So Bitcoin will likely go up, and that'll improve our profits as the price of Bitcoin goes up. So I'm hoping it'll be a net positive, but in the short term, it could be negative.
The SEC, as Valdana was just telling us, has previously cited market manipulation as a concern. And lately, we've seen no volatility in the price. Are you concerned about market manipulation in the price of the underlying commodity?
No, I'm not concerned about market manipulation. It's been quite stable. In fact, I think I read a headline that Bitcoin was more stable than the overall stock market these days, which is a headline I never expected to read. So I don't think there is. Go ahead.
What do you think is the next milestone we need to see to get some movement? Because, we have seen it stuck here at just about $30,000 for months now. What are investors waiting for to move, either higher or lower?
Well, look, the summer is always investment doldrums. A lot of traders are not at their desk. They're enjoying their lives. And I think that come fall, after Labor Day weekend in September, there's going to be a lot of action in trading, just as there is every year. So I do think that it's a question of seasonality. I think that when traders come back in the fall and they're actively trading, there's going to be a lot of movement in Bitcoin as well as other assets. And the smart traders, the smart ones, are going to be positioning themselves before Labor Day weekend. That's my theory.
So if we could just return to Bit Digital's business overall, you obviously reported earnings earlier today, a little bit shy of expectations. How is the business fundamentally doing?
Well, look, our stock is up over 500% year to date. That shows that the market is beginning to give us credit for our business model and the way we execute on our strategic priorities. And we've announced new strategic priorities in terms of expanding our fleet. We're now expanding our fleet by the end of the year to 3.5 exahash. We're currently 99% carbon free. That's carbon free, not carbon neutral. We've added 35 megawatts to our fleet. We've announced the purchase of miners to fill that capacity of 35 megawatts. And as mentioned, we're now announcing the expansion of our fleet to 3.5 exahash, which is a formidable fleet. And another thing, our liquidity in our balance sheet is pristine. There's absolutely no debt. We have $65 million on our balance sheet, so we can weather any bear market. Unlike other participants or peers in our sector who have drank their Kool-Aid a little bit and took on a lot of leverage during bullish days, we did not do that. We ran a very counter-cyclical strategy, and that's paid off very handsomely.
Well, the stock is up 450% year to date, so clearly the market applauds those moves. In your terms of your expansion, you're really moving offshore as well. Is that a purposeful move to get out of the United States jurisdiction?
Well, we did not shrink our fleet in the United States. We've expanded our fleet, and we've chosen to have 3 jurisdictions: the United States, Canada, and Iceland. Iceland is a very unique situation for us because it is 100% carbon free. It draws power from geothermal and hydroelectric sources of power, and it's very important in our mission to become completely carbon free, and we're now at 99%. So Iceland was a very good opportunity for that. But it's also very prudent for any Bitcoin to diversify its jurisdictional risk. It's very dangerous existentially to put all your eggs in one basket and mine simply in one country. It's important to diversify that risk, and we're very careful on that. So that's why we have 3 jurisdictions in which we have our fleet completely operating.
Sam, thanks so much for joining us. Great to get your insight on this market. Sam Tabar there talking to us from Bit Digital, where he is, of course, the CEO. Coming up, Circle Chief Strategy Officer and Head of Global Policy, Dante Disparte, will join us.
And, of course, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
We are interested in digital currencies because we do believe that they have the potential to transform the payment ecosystem. If you look at the primitives of the technology in terms of the cost of transactions, in terms of the settlement time, in terms of the programmability of the tokens, you just can do things that you couldn't do with traditional payment rails. And it's something that is strategic for us, and it's something that we want to be a part of.
That was Jose Fernandez de Ponte, PayPal Senior VP of Blockchain, speaking to us here on Bloomberg Crypto after the launch of its stablecoin last week. Joining us now for more on the stablecoin landscape is Dante Disparte. He is Circle's Chief Strategy Officer and Head of Global Policy. He is here with me in our Washington, D.C. studio. So, Dante, great to see you. Thank you very much for coming in. When we think about PayPal introducing a stablecoin, I understand in theory that could be just a vote of confidence for stablecoins overall, but also it's heightened competition theoretically. Is this a net positive or a net negative for Circle?
Yeah, well, first of all, I would argue it's a net positive. I know the team at PayPal very well, and I know them obviously not only from our time in the payments world, but also from the Libra project, where PayPal was one of the many members of that project. And so the fact that PayPal has come back to an operating model as they looked at how to build a more interoperable payment systems, it's not surprising that they turned to digital assets and stablecoins particularly. But I would argue the one distinction, of course, is that there's sufficient regulatory clarity emerging in the United States to give a public company of PayPal's size and scale comfort that it's time to move into this market.
Well, it's interesting you say that there is sufficient regulatory clarity, because if you listen to Maxine Waters, the ranking member of the House Financial Services Committee, she put out a statement last week. She was saying she was deeply concerned that PayPal did this while there is still no federal framework for regulation and oversight. On the other hand, the chair of that committee, Patrick McHenry, put out a statement praising this, saying that this supports what he, as the committee chair, is trying to do. They, of course, advanced out of that committee stablecoin legislation. What is your degree of confidence that actually crosses the finish line, given that Waters was not for that?
Well, look, I think the United States, we tend to do the right thing after we've exhausted all other options. And we have had a principled conversation in our country about regulating digital assets and stablecoins particularly for nearly 5 years now. In the last Congress, when Maxine Waters was chairwoman, the architecture of today's version of the payment stablecoin bill is an architecture that she helped design in close consultation with the Treasury Department and all of the officials in the President's Working Group on financial markets. And so I think picking up where they left off in the 118th Congress, as Patrick McHenry has done, shows us that we have a pathway when Congress gets back in session to finally set a standard at the federal level that promotes competition like PayPal competing with a company like Circle, but also I think critically makes this an export product around the world. It should be unconscionable for the United States to have digital dollars regulated outside of the U.S. first, and that's the current trend that we see around the world.
I think it's a Winston Churchill quote, right? That you can always count on the United States to do the right thing after all other options are exhausted, which is a classic, obviously. What do you think about your competition with less regulated players like Tether? Does it make sense to you that that you would have competition from a less transparent company like that?
Yeah, look, I don't think the two product categories, a well-regulated payment stablecoin that, despite the fact that there haven't yet been federal rules for the sector, but nonetheless we have regulated USDC and Circle's business and operations across all of the U.S. states that require money transmission rules, I don't think the two products are comparable. And I think, candidly, you saw a flight from safety after the 3 bank failures we had in the United States has triggered this fleeing of the U.S. jurisdiction and the U.S. nexus to unsafe, opaque products by comparison. And so a lot of the growth that you have seen in Tether in no small measure is a byproduct of that technicality where failures in banks imported risk to the crypto segment, including to Circle and USDC. But I think that pendulum is swinging the other way. Just yesterday, Jeremy issued a tweet arguing that this sort of temporary flight from safety is going to correct itself. But if nothing else, it argues for this need for federal legislation, a federal set of rules, because candidly, should anyone anywhere be able to counterfeit U.S. dollars using cryptographic methods, or should there be a rule set around competing with digital dollars as a base currency on the internet, where the safety, soundness, and monetary policy of the United States and other financial integrity rules are respected?
What do you think, Dante, is the ultimate or the most important use case for stablecoins? We see, obviously, stablecoins used heavily inside sort of the crypto ecosystem, but will they be useful in commerce? Is the take rate there starting to pick up?
Well, there's no doubt. And in fact, you could argue, and this is one of the really key distinctions, I think, in the architecture of USDC and Circle's business model, is that we're technology neutral. We're not trying to pick winners and losers at the technological level. In the payments world, we talk about this concept of a walled garden, which is that payments are usable and low cost inside the walled garden. But if you want global, universally transmissible digital dollars, you have to build on an architecture that promotes interoperability. Today, USDC has USDC-enabled wallets in more than 191 countries. You see payment networks like MoneyGram enabling USDC cash-in and cash-out points all over the world. Of course, I would be remiss not to underscore the project with the United Nations High Commissioner for Refugees on using USDC for disaster-displaced Ukrainian refugees. These are very powerful art of the possible case studies, but I think it's only still the beginning. PayPal didn't enter this market segment out of charity. They're entering the market segment not only to combat technological irrelevance of parts of their business model, but also to really demonstrate that the world and people demand everywhere digital dollars that work for them and that are always on.
Just one final note on USDC. The amount in circulation has come down pretty substantially this year. At the same time, you've seen Tether's on the rise. What turns that around?
Yeah, well, I think a lot of things. During this down market, like any other responsible company and responsible steward, Circle has been investing pretty heavily in abstracting away the technological presence of blockchains, right? So one example of a product we've launched recently is known as our cross-chain transfer protocol, which is a technology that enables people to port digital assets, including USDC, from multiple chains. That allows the technology to be constantly upgradable and to effectively have a completely interoperable digital currency. We're also recently launched programmable wallets, which, again, the net experience to the end user of digital assets is that it lives at the device level and at the device-centric level. So programmable wallets is another feature powered by Circle that enables companies, entrepreneurs, and developers everywhere to build on this ecosystem. And so a lot of those developments in this declining market environment have been the way we've invested our business. We've also expanded overseas. We just received a major payment institution license in Singapore. We're waiting for an equivalent license regime in France, where we will build a MiCA-compliant digital euro and onshore the USDC business model as well. And so Circle has been investing pretty heavily in this market, and we're counting on the United States, when Congress comes back in session, to deliver a regulatory framework, candidly, to match the opportunity that the free market has developed around digital currencies.
Dante, great having you on the program. Thanks so much for coming into our studio. Dante Disparte there from Circle. Coming up, Celsius gets the okay to poll its customers on a proposal to launch a user-run version of the company. This is Bloomberg.
This is Bloomberg Crypto. I'm Kailey Leinz in Washington with Matt Miller in New York. Now to some crypto stories that got our attention this week, including bankrupt crypto lender Celsius winning court permission to start polling account holders on its proposal to restart as a user-owned company. Celsius has proposed starting under new management led by investment firm Arrington Capital and could ultimately end up distributing an estimated $2 billion of Bitcoin and Ether.
Singapore finalized its guidelines on stablecoins as the city-state tightens its regulatory grip in the digital asset sector. Issuers will have to meet requirements related to capital, disclosure, and redemption at par, among others. Singapore's guidelines follows Japan, that introduced a legal framework around stablecoins last year. Hong Kong is working on its own standards for the space as well.
And former FTX executive Ryan Salome will not testify under oath about his role in an alleged illegal campaign donation scheme at the cryptocurrency empire, according to prosecutors. He allegedly acted as a straw donor for FTX's co-founder Sam Bankman-Fried in a bid to shape crypto policy in Washington, donating more than $24 million to Republican campaigns. And just on Sam Bankman-Fried, Matt, worth noting, after getting his bail revoked, he's in prison in Brooklyn.
Absolutely. Thanks very much for watching. Tune in next week at 1 p.m. This is Bloomberg.